From the outside perspective, trading can seem so simple because at the end of the day, it's a 50-50 choice. Either the market can go up or down. So why is it that 95% of traders consistently fail when it's seemingly this binary 50-50 option? One of the biggest mistakes is not understanding the directional phases of the market. Now, before alarm bells go off in your head and you start thinking, well, I trade the trend, I trade market structure, I trade XYZ, all of these things that you've been told like the trend is your friend are ultimately leading to your demise. Because if it was so simple to just buy the trend if it's bullish, sell the trend if it's bearish, then why would majority of traders fail? To really find success in trading, you need to have trade models. And for trade models, well, there can be literally hundreds, if not thousands of types of trade models that traders utilize successfully. But if we were to condense down all of them, they'll all fall into just two categories. Either you are a continuation trader or you are a reversal trader, irrespective of trend, irrespective of point of interest, irrespective of trend lines, support and resistance, and irrespective of smart money concepts. When you learn how to view the market from this specific lens of continuation or reversal, then you'll actually start to understand trading models from a position of clarity, not duped by misleading price action like trend that does consistently fail. And in this video, I'm going to be breaking down step by step in detail what exactly is a continuation model, how to spot them, how to recognize which day it could present, how to identify when it's in action, how to refine and qualify a continuation setup, and eventually how to enter and execute profitably with high risk reward and a high win rate these continuation model trade types. And no, this is not just going to be a theoretical lesson. I'm going to show you recent price action, a full case study taking theory with application and implementation from a recent chart example of a trade that I took. So let's jump right in. This is the trade that I want to show you, a recent trade that I took explaining exactly what a continuation model is. Now, there's going to be a lot of things that you maybe don't understand, so I'm going to be breaking down everything step by step, but the key here is to understand the inducements of control. When we go down into the details of the continuation model, we realize the domino effect is inducement number 1, inducement number 2, inducement number 3, and in the key window, the gray box of my London Open, the execution. Now, the great thing about these continuation setups, I'm going to show you exactly how to identify them in a moment, but the key appreciation that I have is these kind of setups are snappy. They are tap and go. It doesn't hang around. You don't consolidate for 15, 20 minutes, let alone hours. It really taps into your entry, and within 1 or 2 minutes, it's either in profit or you've already hit stop loss. This is quick feedback loops because you're really reading the details of M1. And the best part is you don't sit in drawdown for days. You don't have deep retracements where your psychology is going all over the place because you see a big number, it retraces back to a small number, and you cut the trade too early. In fact, it's a very relieving way to trade because within 5 minutes, you should be break even, and within 1 hour you should have made a 1 to 3 risk to reward trade. So when you have a 50 to 60% win rate on these kind of setups, a 1 to 3 risk to reward within the space of an hour, you are able to achieve what most swing traders take days, weeks, or even months to achieve in the space of just an hour. And all the while with more clarity because you're reading the M1 details. And by the way, this is not a one-off trade. This is something that appears multiple times a week. In fact, even on this channel, I've documented multiple types of these exact trades. In fact, multiple videos explaining this exact topic of a continuation model. And before I get into the video, I really want you to appreciate how many of the members are taking this exact same trade. We can see over here also a buy, the exact same London continuation trade, and it goes on and on. With Mohammed over here achieving a 1 to 7 risk to reward, over here a 1 to 6 risk to reward, the exact same trade, the exact same analysis from the entire team. Now, before I walk you through candle by candle on the 1 minute time frame this exact trade, I'm going to share with you the theory and show you some diagrams on what to look for and how to refine these continuation trades, just like I always do on this channel. But if you would like an extension of these videos that I post weekly, a more in-depth detailed guide, I've prepared for you a free 3-day course, something that is going to be more complete and encompassing than what I can share in a short YouTube video. Inside there's literally thousands of slides. We're showing diagrams, case studies, chart examples, full explanations, and walking you through the entire process step by step. And the best part is it's absolutely free. I don't want anything from you. So if you want to claim this, go ahead and message me the word course on the WWA Trading Instagram page, and I'll shoot you the entire free 3-day course directly to your DM. So the mistake some of you will make is thinking a continuation model is when you see a market structure bullish, a sequence of higher highs and higher lows, and you think a continuation model is simply looking for buys in a bullish market. Furthermore, you'll go on to think that a reversal trade is when you've had a bullish market and you sell it anticipating a bearish market. This is not what continuation and reversal is, because it's not linked to trend in the same way, where you can have a continuation model irrespective of a bearish or bullish market. That's the power, and that's why you can find it multiple times a week on a single currency pair, irrespective if you're trending, consolidating, bullish or bearish. And it all begins by understanding these blue boxes. Now, these blue boxes are going to be our Asia ranges during the Asian session, those Asian trading hours, where you're going to have the beginning of the blue box, which is the start of Asia session. The end of the Asia session is going to be the end of this blue box. And the highest point during Asia session is going to be the highest point in this Asia range box. And the lowest point of the Asian session is going to be the low point of this Asia range box. So that's why you are left with usually an Asia that is consolidating, which leaves us these blue boxes of Asia range, where it's showing you the beginning, end, high and low of Asia range, leaving us a nice box. Now, this is important because it sets a framework for the beginning of the day, the daily cycle. So as you have the Asia range box, then you have your London session, then you have your New York session. And usually that's where the movement, manipulation, expansion is going to be. And it all starts with the framework of the Asia range. So we can see that even though in the green lines it is a bullish market, price went higher through a sequence of higher highs, higher lows, and higher highs. When we look at that internal price action, the black lines, we can see that we had price consolidating, inducing over here, pushing higher. And within here, you can start to see why is it continuing to induce before expansion. And this is exactly what I want to cover, that we induce before we expand. And we are going to be connecting these trends, the green line, with these internal price action points, the black lines, and most importantly, connecting the dots with the blue boxes, that is our Asia ranges. So now let's bring this all to life. I want to focus on closely on a section that we've explored over here. When we have a bullish trend already, because it's forming a higher high, higher low, and we're about to make a new higher high. So we have a bullish trend. Inside that bullish trend, I want to focus on the Asia range and how we arrive to make the higher high. So within this bullish trend that we can see of sequence of higher highs and higher lows, I want to see how the Asia range box interacts to manipulate, to form a continuation model, to form that new higher high. So higher high, higher low, higher high, just like we can see over here where we have higher high, higher low, going on to make a higher high. How does it build a daily cycle variation utilizing the Asia range and continuation model? Let's take a deeper look by zooming in that section. So over here, this will be a very standard read, and I'm going to be breaking down the details of what an Asia range is. So first of all, you have the beginning of your Asia range and the end, and then we just draw a box by showing you the high point and the low point over here. That is going to define our box of Asia range. Now, usually when price opens the day at Frankfurt Open or London Open, the beginning of the European session is going to be usually inside of our Asia range. So we know that Asia high and Asia low, these will be liquidity pools. And the best part is it's our first liquidity pools of the day. So we know that wherever we start the day, as long as it's inside of our Asia range, below the Asia high and above the Asia low, if London and Frankfurt open up over here, then we know the first target is to break out of the Asia range, is to break out and either go higher to grab the Asia high liquidity that we see, or is to break out of the range lower to grab the Asia low liquidity. So we know that this is a nice framework for the day because we have immediate targets. And that's why it's a continuation model. We're not talking about just continuing the trend on the higher time frame. We're talking about a continuation to continue out of the Asia range, find the manipulations, find the liquidity, connecting it to the Asia range and building a daily cycle variant. So if that seems confusing, just think about it like this. Asia is a box, it's a range, and the high and low of that box is liquidity. And if we start somewhere in the middle, we're going to break out higher or break out lower to grab that liquidity. That's why it's a continuation model. We are continuing out of the Asia range, and that is going to be an aggressive move because it's London Open with Asia high or Asia low liquidity targets. So we've got liquidity, manipulation, time of day, lower time frame confirmation, a nice trinity of factors that I always speak about. Now I'm going to be connecting everything together in detail, but this is what I want you to focus on with the Asia range. I just want to see what is the trap being formed. What is the story that Asia range is telling everyone to do? And what I can see very clearly is Asia range is saying 1 touch, 2 touch, 3 touch, 4 touch. It's saying trend line. It's saying sell. So this is showing me at the beginning of the session either to get people to sell on this trend line or looking for these break test continuation buyers. So we already found our first liquidity pool. And when I see that starts to get manipulated, I'm going to connect everything together. What else can I see through this read? Well, I can see that we have a double top at Asia high and we have a double bottom at Asia low. So now I know that there is liquidity because of these highs of Asia high and also the double top. And there's liquidity at the lows because of the double bottom and Asia low and this trend line liquidity. Now I have information, I have details, and now I can start to see the traps and the story that price action is building. Now this is the key factor I want to focus on. When I see that we have a resistance level that price broke lower from, and then price pushes higher, breaks structure, and then finds a support level. So when we have a resistance level that price is holding, and then we break past that resistance and now it becomes a support support level. So now our price holds it the other way. When I see this, this is known as the break test, something I've spoken about on the channel before, a full video guide. When I see this and it's happening around the Asia midline, then I see price induces that area. Let's break it down. We know what's happening here is that price has went and made a low. It's pushed higher, broke that resistance level, made a break of structure, found support, continued higher. Now I've built up a little bit of liquidity. Price comes lower, shoots lower, does the inducement. This is what we speak about. The break, test, continuation, inducement, real move. That's what I'm looking for. I'm looking for exactly that formation. If I can see a resistance level turn to a support level, make a higher high, induce it all, and then the real move, that is the building blocks of a continuation setup. The goal being, if I can read the control in this way, then I know price is going to break out in that direction. So it's going to be breaking out bullish. First target is going to be our Asia high and our trendline liquidity. And if we can find this at the London Open, we can find lower time frame confirmation, and we use these inducements. That's the Trinity, and that's a continuation model. So even if you're not in a point of interest or are in a point of interest, whether you're in a bullish market or a bearish market, it doesn't matter. It doesn't matter about any of these things because this works in isolation. If you get these checkboxes in place, you have found a continuation model irrespective of trend. And the best part is if I can connect it to a smart money trap, for example, smart money traders selling on Asia high, there's going to be many types. Go watch the videos about the smart money trap types that we have. But if I can now find a resistance, turn to support, getting induced, and a continuation model out using a smart money trap as a magnet, this is going to be my preferred continuation model types. So now that we've got the theory in place and what we're looking for, let's now look at that chart example once again that I caught and the full community caught together. And by the way, if you want to join us on the inner circle, our community is a thriving and vibrant environment that is designed not just to be information. You don't need another course. You don't need just more information. You need application. You need implementation. You need someone to hold your hand and walk you through the entire process step by step. That's why we have multiple times a week Q&As, daily live streams, one-on-one coaching, and a vibrant community of people that want to see you win. If this sounds like something interesting to you, unfortunately, there is limited capacity because we do the one-on-ones. We cannot hold thousands of people. That's why we have application process to make sure we work with the right people. So if that's interesting for you, click the link in the description to fill out your application form, and hopefully I see you on the other side. First things first, let's establish trend. What is going on the higher time frame, in this case 4 hour, where we can see this high went on to make a lower low, break past this structure, this lower low went on to make a lower high, went on to make a failed lower low. This now was no longer a bearish trend because bearish should have been lower low, lower high, lower low. When we see this failure of this lower high, that does not go on to make a lower low. In fact, it makes a higher low compared to this low, and that goes on to make a higher high. We have entered a bullish market where we can see the previous bearish leg has now turned into a bullish leg, and we formed a higher high. And we can see that higher high is formed by inducements, taking out these levels, which I'll show you in detail in a moment. Inducement led higher high. What does that happen next? Higher low going on to make a higher high. Once we have that higher high in the market, we have a pretty impactful inducement over here, and that inducement leads to not a lower low, not a higher high, so we have internal price action, and then goes on to make a lower low, this previous higher low. So let's zoom in and see exactly what I mean here, where we can see that this last higher low that went on to make that higher high, that bullish push in the market, has now been taken out with internal lower low. So we have now found a bearish market. So the green dots are going to be for bullish trend, and naturally the red dots are going to be for bearish trend. So now we can see we made a lower low. This becomes the bearish main push. And we could break it down to this sequence of this internal lower low that made this internal lower high that went on to make this external lower low. We mark out the supply zone, and this is the range that we're in. So this is my area of focus, the ranges that I always speak about, where you have the internal lower high and we have the overall lower low. This has now established our trading range, and we are overall bearish, and this becomes the supply zone. So what do we expect? We expect price made a lower low. We start to have a bullish complex pullback, eventually going on to the supply zone to make a new lower low. That's just simple lower low, lower high, lower low market structure, with this bullish sequence being the complex pullback. Now that's one narrative, that's one trend, but as intraday traders, we need to read all time frames to get that full picture. And what I want to understand is, yes, we formed a lower low in the market, but where did it touch? And when I look towards the left, I start to see this was a higher low that made a higher high. So not only did we grab this liquidity, so we had an inducement, we arrived to where this important area that I just spoke about, talking about how the higher high was made from an inducement of this level, an inducement of these lows that went on to make the higher high. So we know that we're in a demand area that led to a higher high that had inducements inside of it. So not only are we getting an inducement demand, we are also inducing a previous demand area. So when price has now gone on to make a lower low, it's not just a lower low, there is inducements inside of it. This is an impactful low. And when we follow the picture after that, we can see we have another buildup of liquidity here, another inducement, and price pushes out and makes a higher high over here. So we start to see that we are getting bullish control and bullish inducements from bullish demand areas. Now we mark out this area. Why? Because this is a block, the last sellers of the inducement before the bullish action. This defines our block, our inducement block. We'll leave this as a nice demand area to focus on. And as we start to see this bullish breakout from this inducement demand block that led to this high in the market, breaking past this previous lower high that made a lower low. And now when we see everything connected together, we know that this was a lower high that went on to make a lower low. This was a inducement on multiple levels and an inducement demand it tapped into. Perfect. Then it did another inducement over here. We leave the inducement block over here, and then we have a push out breaking structure to make a higher high. So lower low, higher high. Then as we progress on, we start to see consolidation and range where we have multiple touches to the high, and then we have this multiple touches to the low. When we have this liquidity build up, we see we get inducements both sides. We sweep the high over here of these levels over here. So we've got an inducement high, and at the same time of this low over here, we're getting currently an inducement low. So what do we do when we have an inducement high and an inducement low? Who's in control? Well, context and narrative matters now, where I can start to build a picture and connect all the dots. When we've already spoken about price is bearish, right? We said price made a lower high to lower low. So when we have that bearish push, the bearish main push, this red arrow, and the supply zone associated, we know that once we form the low and we've had the inducements we spoke about, we expect a complex pullback all the way to the supply zone before we go lower. So that means we know that we are ultimately trending higher until we arrive to our destination, that is supply. Now, how do we get there? Well, we might have an inducement high over here. We might sweep liquidity, but is this in a point of interest? No. It's in no man's land. So because it's in no man's land, we can see this is simply a higher high, temporary retracement. That inducement over here allows price to come lower to this demand area block that we just marked out, this inducement block. And then once we've arrived here, then we can continue higher. So therefore, this becomes a smart money trap as always, because it's a higher high in the complex pullback. It's a higher low that made a higher high. This higher high is not a supply zone. It's a trap. So that means based on that context of an inducement demand block, an inducement over here, when we arrive over here and induce all of these lows, we know that these guys are in control and the target is going to be the supply zone. So therefore, if we can find an Asia range box and the manipulations we need, we can now buy into that supply zone and complete this retracement or complex pullback into that supply zone. That's the plan, and that's exactly what happened. Now we've got our framework and we know we've got that inducement low into demand. Now we find our Asia range box. We know we are framing to go higher based on everything that I just said. We are in a complex pullback, we are internally bullish, and we have a supply zone target. Now I need to read my Asia range, and what I'm looking for is traps. I'm looking for a story, and I can already see that our initial balance sets the low of the day, the first hour of the Asia range. This is our initial balance. We can see that price is respecting it, but to the high side too, what is Asia range telling us? It's telling us one touch, two touch. We have formed double top at the high, and more importantly, we are getting a low, lower high, lower low sweep. So we're getting a sweep over here. Smart money traders are going to be selling because they see a break of structure over here. And that's why this area is a smart money trap, because this sweep that leads to a lower low, leaving all of this obvious liquidity of this trend line over here. Not only do we have this trend line liquidity, we also have this smart money trap liquidity. We also have the double top high liquidity. And what do we see? We see that these lows are getting swept. So we have one touch over here, two touch over here within our initial balance block, which is, by the way, a inducement within itself that led to a push out. So when price arrives and we find this inducement, perfect. Now we know this inducement could have a destination, which is trendline liquidity and smart money trap liquidity. So when I see on Frankfurt Open, we get the movement up, but it doesn't break out yet. This is where we get interested. This is the building blocks of what I was mentioning earlier in the diagram. Now we have a smart money trap zone. This is where sellers will be interested. Smart money traders will be interested because we found a build up, a sweep, and a bearish push. And then price comes back, and what does it do? It says, hey guys, get in, sell. What does it give them? It gives them another break of structure. So now the smart money traders are going to be loving this because they found a smart money zone. When price arrived to that smart money zone, it gave a break of structure, taking out this higher low that made a higher high, making a lower low. And then what does it do? Sweeps them out. So now already we're getting manipulations. And then what happens after that sweep? We get another bearish break of structure and we form another low. So that invites in even more smart money traders to say, you got it wrong the first time. Don't worry. try again, we had another break of structure bearish. And all the while, they're not getting the narrative and they're just feeding the liquidity to the market. Liquidity over here on this zone, and then it fails. And then when they make more liquidity in this area of their stop losses all around Asia high, we look back and we say, oh, we have 1 touch, we have 2 touch, we have 3 touches, we've left highs. Even though we have a break of structure, this is going to be a trap because we notice the inducements of control. So let's focus on that now. The correct way to read this is by following the liquidity, knowing that we are going to be more likely bullish because we set the framework of the inducements on the higher time frame. And then we see the first manipulation, touch number 1, touch number 2, inducement, perfect, and push out. And then what do we get over here? Another build up, another inducement, push out. Perfect. So we can see the buyers are gaining control. And then when we see they invite in sellers, induce them out, invite in sellers, what do we see now? That they're inviting in sellers, this is an inducement, all the while taking this low. Now, this is the framework that I was setting at the beginning, where I was talking about finding a resistance level. So we have this resistance over here where we're getting a touch of rejection, a touch of rejection. That resistance level, after this inducement, that resistance level is broken. Once it's broken, we get a test and it turns into support. So resistance turns into support. We find the block that was responsible for that inducement to push out. So when we found this blue box, this demand area block that took out this resistance level and turned it into support, then we do the break, test, turns into support, continuation, inducement. This is what we spoke about. When is this happening? Not a coincidence. Bang on London Open. So now time is coming into play. And now we've got the exact model that we need. We've got the resistance turn into support. We've got the test turning into a continuation, turning into an inducement, inviting in the sellers and inducing into our refined IFC inside of this demand block that I spoke about, all the way down to this imbalance. Perfect. And we know that inside of here is also an inducement. So when we connect everything together, we see we have inducer number 1, inducer number 2, inducer number 3, and then I just need to find my entry. Now, this is the details that count. So pay attention closely. So we have that resistance level, break structure, and now turns into support. And then we get the inducement. After that inducement, what do? We shoot higher and we're back in this smart money trap zone. Why? Because they got taken out over here. Then price swept it again and made a bearish break of structure. So sellers are going to be getting in. They're going to be looking for entries and they're going to be watching it closely. And they see even here, price taps into the zone and then it starts to make bearish moves. It starts to tap into the zone and do something like this. When you're getting that bearish reaction over here, we're seeing prices inducing. When we see that inducement and then price starts to fail, we're throwing wicks, so we're failing. And then when I see that price is respecting that inducement block inside our London Open, and then we get bullish momentum, I can now take this entry with the market execution as one of our trade model entry types, and I connect the dots and I see I've got everything that I need. I've got an inducement, a sequence of them where I've got 1, 2, 3, and 4. I've got 4 inducements. Forget about the higher time frame. I'm talking about in the session. So we're getting inducements, we're getting time window, we're getting the confirmation we need, and we have smart money traps, Asia high, equal highs to targets with all of this 1 touch, 2 touch, 3 touch liquidity. Smart money traps, Asia high, and I look for that quick, snappy continuation model. I enter with that protocol that I mentioned, stop loss at the low of that inducement. That gives us a nice 3-minute engulfing, and more importantly, it gives us a nice stop loss of 4 pips. And that means within space of minutes, we break even as we take Asia high. During the London hour, we now already start to approach a 1 to 2. And then within the space of an hour and a half, we hit that 1 to 3, where I always take a partial, peaking where at our supply zone around a 1 to 8 risk reward, like you saw many of the members also getting, targeting that supply zone we spoke about earlier. So it's done exactly what we spoke about from the beginning, where we arrived into a demand area and induced, and then had the pullback all the way into the supply area, all while doing a continuation model. Just find the inducements, find the control, find the narrative, and then take a continuation trade, breaking out towards Asia high or Asia low liquidity. This was a wonderful setup of recent price action that not only I caught, but many members caught. And in fact, this is something that repeats multiple times a week with precision, high win rates, high risk reward ratio, and ease on your psychology because of how quick it becomes into profit. But as you know, all of these things only count if you understand all of the criteria correctly, and most importantly, you follow the restrictions of a strategy. Because as I always say, a restricted trader is a profitable trader.